Welcome to the Benefits Executive Roundtable, hosted by Dorothy Cociu, President of Advanced Benefit Consulting. Dorothy is a nationally recognized benefits and compliance consultant and group health broker. Here, you will watch and listen to industry experts who will break down the latest trends in employee benefits, healthcare reform, state and federal legislative and regulatory activities, all designed to empower executive decisions. We are proud to bring to you all new video podcasts. We hope that you enjoy your new video podcast format, and please forgive any audio or video imperfections. Thank you for viewing and listening. Meet Advanced Benefit Consulting, an award-winning boutique benefits broker and compliance consulting firm that offers comprehensive benefits and compliance consulting. We offer personalized service and the ability to work directly with the owners. We invite you to contact us or connect with us on LinkedIn and include us in your broker consultant search.
Welcome to the Benefits Executive Roundtable. I'm your host, Dorothy Cociu, President of Advanced Benefit Consulting. And I want to welcome back my guest today, Chris Condeluci, who's an ERISA attorney and also the Washington Legal Counsel for the Self-Insurance Institute of America, as well as Anthony Murrello, who is the SIA Government Relations Manager. Welcome back, you guys. I'm so glad to have you back.
Thanks for having us.
Thanks, Dorothy.
So last time you were here, we wanted to talk about a lot of things. It was in the fall, and it happened to be the timing was just so perfect, right in the middle of a government shutdown. And literally it just started. And a lot of things that you guys wanted to talk about, we weren't able to talk about. So we said we would come back later in the season when things happened, when things changed. So I invited you guys back, and thank you for coming back, because there's so much going on right now in Washington, and it's just kind of been a whirlwind. 2026 has just been one thing after another, and started off with a bang. As you had said to me earlier today, Chris, it really did start off with a bang. Proposed regulations, and then we had DOL stuff, and we had CAA's 2026 stuff going on. We have all this stuff going on, and I don't want to get into too much detail on that because I'm going to let you guys talk about it. But let's start with a couple of things that are going on. Obviously, there's a tremendous amount of activity in Congress, as well as all the departments, as I said briefly a second ago. But let's try to break it down a little bit for the audience. Let's start with some of the bigger things. The pending Patients Deserve Price Tags Act. Tell us about that. What's that all about?
Yeah, thanks, Dorothy. Like you mentioned, 2026 is definitely starting off with a bang. This is something that the last couple of years, Chris and I have been banging the drum that, this legislation's coming, it's coming. We just had a couple of hurdles to get through, but it's finally here. And so to keep that momentum going, one of the bills that's been getting a lot of attention in DC right now is the Patients Deserve Price Tags Act. It's a bipartisan effort to strengthen healthcare price transparency. It was introduced, very bipartisan bill by Senator Marshall, who's Republican, and Senator Hickenlooper, a Democrat from Colorado, in the Senate Health Committee. It's a bill that Chris and I, along with SIA members and our coalition partners, spent a good amount of time this year advocating on the Hill with Senate staffers, congressional staff. At a high level, the bill builds on transparency rules that some already exist, things like transparency and coverage regulations. It would essentially codify a lot of those requirements that we've reported on and are existing today. The goal is pretty straightforward: make sure patients, employers, and health plans can actually see the real prices of healthcare services before their healthcare is delivered. The bill would require hospitals and other providers to publicly disclose negotiated rates and real prices for services, expand transparency requirements beyond hospitals to other facilities like surgery centers, labs, and it would also increase penalties for organizations that don't comply with the law. And then importantly for our industry, it also includes provisions aimed at improving access to claims data, pricing data, which obviously can better help employers better understand their healthcare costs and manage them. So overall, this bill is it's a part of a broader push in Washington to bring more transparency and accountability to pricing. And we think this bill will be a key step forward into lowering cost, which at the end of the day is what all Congress members advocate for on the campaign trail. So again, we hope to see the bipartisan support for this bill continue. As far as timelines concerned, we had been told a couple months ago that they could expect the bill to be marked up by the end of March. What we're hearing now is that may not be as likely. There's kind of more up in the air, as often happens with Congress. They're not known for being super punctual. So we know that Senator Help's been having what they call roundtable conversations on price tags, meeting with employer groups, consumer groups, and providers in order to get feedback on the bill. So they're in that process now. One of the takeaways we've actually heard from come out of those discussions is the need to actually update some of the language within the bill, just bringing it up to date with the TIC regs that were introduced earlier in the year. The language for this bill didn't align with when those regs were come out. I mean, Chris knows they've been sitting on that language for years and years now, so obviously it's a little outdated. And actually, I'll turn it over to Chris, 'cause I know he's been spearheading.
Before we do that, I want to ask you a question because, well, actually, sort of a question, sort of a statement. Now, for our audience members that are listening and watching, they might have some questions on this. Wasn't all this already in effect? Because obviously hospitals were supposed to be doing those postings before. Obviously, there were supposed to be a lot of transparency happening since all the regulations and all this legislation happened in 2021 and beyond. What makes this different than what happened in 2021? What is it about the pending, the Patients Deserve Price Tags Act that is this an add-on to existing legislation? Can you kind of fill in our audience about that? Because I know the first time I heard you guys talk about it, I was kind of confused on some of it. So maybe you could just kind of back up for a second and just explain why is this different now than what was supposed to already be in effect?
Chris, do you want to give the background on that since you were more involved back in 2021?
Thanks again for Dorothy for having us. And to this question, so this particular legislation, as Anthony mentioned, would what we call codify the existing regulations. So to your point, Dorothy, the transparency rules applicable to hospitals already in effect. Mm-hmm. The transparency rules applicable to healthcare payers, insurance companies, and self-insured plans, the transparency and coverage rule, already in effect.
Right.
What Congress likes to do when there's regulations is they like to put them in statute. So they actually like to put them in the law, a fixture of the law. And why does Congress like to do that? Well, one, it ensures that any future administration can't come along and issue new regulations that, let's say, might reinterpret what those existing regulations already say. Because the way politics are going, and we've seen this administration to administration to administration on various issues, and specific issues, mind you. Fortunately for us, transparency is a bipartisan issue, as Anthony alluded to when it comes to the sponsorship of this underlying act. And you've heard us talk about how bipartisan transparency is. But Congress still likes to put a regulation in the law, a fixture of the law, to prevent that. And so that is one of the major pushes for putting it into statute. But Congress also wants to, quote unquote, improve and, quote unquote, strengthen existing law. As Anthony indicated, there are effectively no penalties on the transparency and coverage side, and certainly no enforcement. We can point to some penalties, but we won't go down that rabbit hole. But this legislation includes civil and monetary penalty requirements that say if the information is incomplete and inaccurate, the entity that is responsible for producing this information should be penalized monetarily. Mm-hmm.
I believe it's in between 5 and 10 million. The penalties could be up to. Just
correct. So they're even significant in the statute. Yeah. Where again we have really nothing on the regulatory side. On the hospital side, as many may know, similarly, not that much enforcement and not much in compliance as a result of lack of enforcement.
Right.
But the administration, including the previous administration, again, showing the bipartisan nature of transparency, has actually increased some of their enforcement efforts on the hospital transparency side,
which was needed,
and increased the monetary penalties on the hospital transparency side, which has moved the needle. Many of us who've been following this do believe that it's moved the needle from a compliance perspective in the hospital context. But once again, codifying it and saying it's in statute has a little bit more teeth, even though it is somewhat existing. I even think that the penalties are higher than the regulatory penalties, as Anthony just alluded to. And then there's uniformity between those penalties that apply to hospitals as well as those penalties that apply on the healthcare payer side. So at least that hopefully gives you a little bit of sense of, even though stuff's existing, Congress likes to codify existing stuff and then add existing stuff. And sorry to keep talking, but as Anthony pointed out, this legislation expands the healthcare providers who are subject to publicly disclosing pricing. As Anthony indicated, the facilities that will now be subject to disclosing their prices include lab services, ambulatory and surgical centers, imaging. That stuff is not currently in the reg. It's not currently in existing law, or at least it's not as a fine point as this legislation is suggesting. So that's another difference. And then lastly, I'll say something that kind of is an existing law is the whole access to health claims data. Mm-hmm. We here at SIA have been big proponents of increasing access to health claims data. Right. We did see the gag clause prohibition that came in via CAA 2021, but we've also seen that the owners of the provider network and the service providers are still not sharing the data. So this legislation will strengthen and put more teeth, both penalty-wise, as well as what you must do this and in a clear manner. Yeah. Where most folks like to, and this is the case, being the lawyer on one side of the table and being the lawyer on the other side of the table, you look at a statute and you interpret it that's in a way that's most favorable to your position. Mm-hmm.
Of course.
But if you can write a statute that's much more crystal clear, not to say that's ever easy to do, that is something that they're also endeavoring to do through this legislation.
Well, that makes a lot of sense, and I appreciate you explaining that, because I just know that there are audience members out there that are going, I thought all this was already in effect. What's the big deal now, right? So thanks for clarifying that and giving us a little bit more background on that so people would understand it truly. And I didn't mean to cut off your thoughts on that. I'm sorry. I know that Anthony had asked you to comment on his comments on this act. Is there anything else in addition you would like to continue with before I cut you off with my question?
I mean, Anthony, if you'll indulge me, let me say this, because maybe this segues into the proposed transparency and coverage regulations that were issued right before the Christmas holiday, which kept us all busy early on in the new year, is something that it goes back to your question and the audience saying, well, what? I thought this all was in effect. And in a way, much of it is. But the problem that we've all been experiencing is the lack of compliance with those existing rules.
Right.
And so there is efforts to put more teeth into these requirements, add penalties that should move the needle from a compliance perspective, because there aren't any penalties. So it's almost effectively trying to do things to make everybody, when I say everybody, just the stakeholders who these requirements apply to do what existing law has been telling them to do. So it's kind of another redux of this, so to speak, which is unfortunate.
Yeah.
But oftentimes that's the case, is you have to go back and back and back to make sure that they do it. Mm-hmm. And that's partially, a large reason why we have this legislation, in addition to some of the new stuff.
Yeah.
But the point that I wanted to make is, when it comes to enforcement and compliance, both on the claims data and pricing information, but I'll focus on pricing information for a moment. The question that really, I think, and we as the self-insured community and plan sponsors need to ask is, who really possesses and controls the pricing information? If the plan sponsor does not control or possess that information, how and why should they be liable if and when that information is incorrect? Which, by the way, that information is currently incomplete and incorrect. That is the major message that both the Biden administration and now the Trump administration has gotten from folks within the industry when it comes to these transparency rules, both on the hospital side and on the payer side. But the problem is most acute on the payer side, the transparency and coverage rule. So again, it comes down to who's that entity that possesses and controls. If it's not the plan sponsor, who is it?
Right.
Well, we at SIA, we've actually said to the departments in our comment letter, and again, we can go more broadly on the proposed regulations, to tick regulations at the moment, but bear with me as I say, because this is applicable to this price tag legislation as well. If the information is incomplete and inaccurate and plan sponsors don't possess and control it, they should not be held accountable. Then who should be? The owner of the provider network is the terminology that we're using, and we've suggested the departments adopt. Well, who's an owner of the provider network? Well, typically in the self-insured context, it's going to be an insurance carrier who built that provider network and rented that network to the self-insured plan, because it's the carrier that has negotiated all of those rates, and therefore they're the ones that possess and control that pricing information. As you know also, Dorothy, there are third parties that either get that provider network from the carrier and then contract with the self-insured plan. Arguably, that third party is the owner of the provider network, even though, really the carrier still is that possession and control entity. Then we also know there's other third parties that just build provider networks from the ground up, and then they contract with self-insured plans. Well, they're the ones who negotiate that, so they are the entities that possess and control. Now, we do have plan sponsors that do directly contract with medical providers. It's not widespread, as you know. It's in very limited circumstances, different employers, different geography. But that plan sponsor possesses and controls the data in that case, right?
Right.
So look, the owner of the provider network possesses and controls the information, and they need to be held accountable to ensure that that information is correct, complete, and accurate. And this is important for purposes of some aspects of the legislation as well as the regulation, which I won't get into yet because I've been talking so much. But I do want to get across to the audience, and especially trying to answer your question of the pending legislation, which we call the Price Tags Act, shorthand, yes, is much existing law with some new stuff that we discussed. But the whole reason why Congress is pursuing this and stakeholders are supportive of it is because there's lack of compliance and enforcement, and more needs to be done to ensure complete and accurate data is disclosed.
That's absolutely true, because how many hospitals, for example, were actually posting anything? Very, very few. A lot of my clients would say, I thought they were supposed to be posting this. I thought we were supposed to be able to see how much they were charging and this and that. Well, it's kind of hard. And I'd always have to explain to them, well, until there are penalties in place, that's probably not really going to happen. So again, I'm glad. I just wanted to bring this up because I know they would have those questions. People in the audience would have those questions.
Yeah, no, I'm glad you clarified that, because that's something that that at least I overlook.
Yeah. Yeah. Well, sometimes when you're right in the middle of it, you're right in the middle of it, right?
Sure.
So let me ask you you started talking about the proposed TIC regulations, the TIC regulations. Why don't you tell us more about what's going on there? Because that's a lot.
Yeah. And Anthony, why don't I turn it to you just to talk a little bit about what we say about what we, with the election in 2024 and the opportunity for this administration to undertake a Transparency 2.0. No, I'll put you on the spot, but why don't you kind of mention, at least from a high level, where this administration is right now, and then I can get in the weeds of the proposed reg.
Yeah, so a lot of the provisions, it's built on Trump's first term, the administration's first term, where we called it Transparency 1.0. So when they came in, one of the things that we advocated for, hey, there's a lot of things that we liked and we're on board with what we did in the first term, and we just want to see those things continue. So that's a lot of the conversations that we have are focused on that, and that's kind of, to our benefit, kind of where the background for this Transparency 2.0 has come. And, we're still kind of analyzing, breaking down things like the TIC rules. And while we're doing that, we're kind of already trying to move on to what we call Transparency 3.0. So yeah, that's kind of a high level explanation of, how we got where we're at.
We'll let Chris lawyer it up now. Go ahead.
Yeah, and that's a great way of setting the table, because we've been waiting for this Transparency 2.0 exercise. And we actually were hoping we would see regs earlier in the year. And actually, to go back to the start of this podcast, you mentioned when we were here last time, we said there's a government shutdown, and that's slowing down regs. And one of those regs that we indicated was being slowed down was this proposed transparency and coverage reg. We didn't see it until December 19th, when we were hoping we would see it, let's say, September 19th.
Right.
But that was right before the government shutdown, or October 19th, when there was a government shutdown. So that's just one example to kind of pull it back to your points earlier. And we are hoping for a Transparency 3.0 exercise, which would be a reg that comes out subsequent to the one that I'm about to talk about. So the reg that was just released on December 19th was intended to effectively reduce the size of the machine-readable files. And the machine-readable file, MRF for short, or MRF that people is the connotation that they use, is the means through which the pricing information is disclosed. And these MRFs are electronic files, and they are vast. I'm not a tech guy. I'm a pointy-headed lawyer, policy geek.
They're huge.
Not a tech guy, but everyone tells me how terabyte upon terabyte upon terabyte, not necessarily knowing what that means.
Basically meaningless information for the most part.
And meaningless information. So,
yeah.
And the administration was hearing that from the industry for the past 4 years. So they finally said, okay, let's get a reg that is at least endeavors to attempt to reduce the size of the files, also reduce the number of the files, and also try to reduce the duplication, because there's a lot of duplication in this information, which makes it just gobbledygook.
So basically they want to simplify so people can actually understand it to some extent, at least the people that need to have those files, because the general consumer doesn't. This was not designed that all the stuff about those files, machine readable files. It was for machines to read, not human beings to read. So I want to make sure people are aware of that. And we've talked about that many times in the past. So they're actually trying to simplify that. I just want to make sure I understand it and the audience understands it. They're trying to kind of, in tech terms, not really, dumb it down so most systems can read them, correct? Instead of being so complicated that a lot of systems couldn't, right?
Yep, most systems, and then humans. So your data scientists and your other experts who can go out and grab this information, try to make sense of it, and then you effectively hand over that information that, let's just assume for a moment you're making sense of it, because it's very difficult to make sense of it. But let's say you can, handing it over to others then who are in the benefit consultant space and otherwise, who can say, okay, or the data analytics space, okay, I now kind of can see, it's almost like a matrix, I can now see, the zeros and ones and just the different information, the trends and the cost and the cost of providers in a particular geographic area, different networks, that is then intended to trickle down to the plan sponsor, where then the plan sponsor can use that information to make actionable decisions of, what are the cost of our covered benefits? Do we need to negotiate rates? Do we need to go find a different owner of the provider network to rent their network, because the negotiated rates for them happen to be lower than they are for a comparable size of employer relative to my existing, provider network. So that's kind of the intent there. So back to the machine readable files and what they've just been endeavoring to do through these regs is, I don't want to get too far in the weeds, but changes to the in-network rate file, which is the file that discloses all the in-network rates. One change that we think is fairly helpful, because back to the owner of the provider network concept, if a carrier builds the network, they're building that network, yes, for self-insured clients, but also for their fully insured line of business. So you have, let's just say, 100 self-insured employers on the same provider network as, let's say, 20 plans in the carrier's fully insured line of business. Well, why should you have a file for each 100 self-insured plan in each of the 20 fully insured plans? Why not create one file? Because they're all on the same provider network. And so that is one change that is suggested, is that all 100 and all 20 should effectively be given the same file.
Yeah. It would make
now, that's assuming,
sense.
of course, it's all the same negotiated rates, but oftentimes it is based on the rental aspect of networks. So that's one change. Out of network allowed amounts, out of network payment data. There's not a lot of out of network payment data in the existing out of network allowed amount files. And one of the reasons many believe that's the case is there's actually a claim threshold that there must be a number of claims that must be triggered for a particular out of network service before it's disclosed. And right now that claim threshold is 20 claims. Many times there's not 20 claims for a particular out of network service, and therefore it's not disclosed. Maybe there's 12. So there's 12 claims that's incurred, but it never gets disclosed. So in understanding that we as in the community need more out of network payment data to understand benchmark pricing, networks, how much I am going to pay for an out of network service, the administration in these proposed regs reduced that 20 claim threshold down to 11. Now, arguably, should it go to like 1? Yes. But they chose 11. So at least that's, I think, hopefully an illustration for folks of trying to, interesting here, increase the amount of information that is being disclosed, because that information is just not being disclosed for the reason I described.
Right.
I don't want to go too further in the weeds on the regs, but again, just giving you the high level of what it's intended to do. But I want to say, again, back to my owner of the provider network comment. Here's something that the reg and our comment on the legislation. Here's something that the proposed reg didn't do, is they do not have enforcement provisions in this proposed reg, which was very disappointing to all stakeholders. Obviously us in the self-insured space, but other, employer groups out there, employer trade associations, those in the transparency space, those data scientist companies that are going out and grabbing the data. So no enforcement in this proposed reg. So many of us
defeats the purpose, really, because it's just like we talked about a second ago with the other. Anyway,
precisely.
Right. You need
so
they don't take it seriously. They don't take it seriously if there's no enforcement.
Exactly.
Yep. So we in SIA's comment letter, and this is something that is in the legislation. I wanted to wait to say this till we talked about it here. An attestation requirement on the entity that possesses and controls the pricing information. Here, the owner of the provider network. And what is this attestation requirement intended to do? It's intended to say the CEO or authorized representative of that entity has to attest to the completeness and accuracy of the pricing information and attest to compliance with the regulatory requirements. If you have that attestation requirement, that should get that entity, if there's penalties that flow from either attesting incorrectly or not attesting, or attesting and again having the incorrect information, that is an enforcement mechanism that many in the employer community, including SIA, has coalesced around. And we've asked the departments to include in these proposed regs or include in the final regs. We said, hey, you didn't include any enforcement in this proposal. When you finalize it, you should include enforcement. And here's something you should consider, an attestation requirement. And why, again, is that important? Why are we mentioning it here and tying it back to the legislation? The legislation, in addition to the penalties that Anthony mentioned, there is an attestation requirement, which says what I just said. A CEO or an authorized representative of the entity that possesses and controls the pricing information must attest to the accuracy and completeness of the information and must attest to the compliance with the law. And many of us think and hope that that will be a means to an end with regard to enforcement.
Well, let's hope all that works out the way it's supposed to work out, right? We can only hope. Well, I want to spend some time on the DOL Compensation Disclosure Regs because there's so much in those. And I know we can talk about that for a long time. So kind of start, why don't you just start the conversation about this? Fill everyone in about what that's all about, and then we'll kind of get into some of the details of that. Okay? Would you mind just starting the conversation? Then we'll get through step by step as we go. Okay?
Yeah. We think the most important point for this audience to take away from this podcast is these DOL compensation disclosure regulations. They are applicable to entities that provide pharmacy benefit management services. Now, the reg defines what the DOL thinks are pharmacy benefit management services. And the takeaway is it's any entity that provides pharmacy benefit management services, meaning it's not just PBMs that are the target of this regulation. The target of this regulation is any entity providing pharmacy benefit management services, which means if you're a TPA and you contract with the self-insured plan to provide pharmacy benefit management services, and you actually provide those services, or let's say you're a TPA that contracts with the plan to provide those services, but you don't. You instead subcontract with someone else to provide those pharmacy benefit management services. You, the TPA, are still subject to this compensation disclosure regulations. Why? Because you contracted with the plan to provide those services. Interestingly, in the proposed reg, they actually even called out level funded plans as a type of product or arrangement that provides a bundle of services to the underlying self-insured plan. One of those services, as the DOL suggests, is the provision of pharmacy benefit management services. So thus, the operator of a level funded plan will be subject to this compensation disclosure regulation. So again, the most important takeaway is pharmacy benefit management services. Again, the reg defines it. We don't have to go into necessarily that definition just yet or even at all. But if you're an entity that does provide something on that list, it's in that reg, you're subject to the compensation disclosure requirements. Now, I'll say this and then maybe turn it back because I'm talking so much. What do you have to disclose? So let's say I am an entity, whether I'm level funded or TPA or I'm a PBM or someone else. The Departments of Labor enumerated 8 compensation streams that flow within the prescription drug supply chain. And I can kind of enumerate those. It's a little easier than going through the pharmacy benefit management services. It's just direct compensation that you're receiving from the plan or the plan sponsor. It's also compensation that you, the entity, are receiving from the drug manufacturer. We know PBMs receive rebates, discounts, and other remuneration. Here, you would have to disclose that. And if you're even, again, a TPA, you're not a PBM, but you're happen to receive rebates, you've got to disclose. But let's say you're a TPA who is providing pharmacy benefit management services, but let's say you're not receiving rebates from the drug manufacturer. Well, guess what? Then you don't have to disclose that in your compensation disclosure requirement, even though you're subject to this reg. Effectively, you would just, assuming for a moment, all you would be disclosing is the direct compensation you receive from the plan for your administrative services fees. And then there's this other compensation streams, like if there's a termination payment. So if you terminate your contract early, there's another kind of formulary methodology. If there's compensation associated with a formulary of the drug price versus how much is charged to the plan. And then related to that is spread pricing. Spread pricing has been a big issue. We've all discussed it. Congress wants to get rid of it. Some plan sponsors actually like it. So instead of getting rid of it, the Department of Labor just said, if there is spread pricing that entity is receiving, you must disclose that to the self-insured group health plan fiduciary through this compensation disclosure that's required under the reg.
Could you define what that is? Because some of the audience might not understand what spread pricing means.
Spread pricing. So spread pricing is, let's say the PBM buys the drug at $100, and the PBM charges the plan $120,
Mm-hmm.
and the PBM pockets that $20. That's spread pricing, that $20 that they received as compensation to them. And it's just effectively the PBM marking up the drug that they bought. And I don't want to say middleman because that's an overused term in the context of PBMs, but it's like a middleman marking up.
That's just a markup, yeah, and that's
and that's the spread pricing that must be disclosed.
I always wondered, why didn't they just say, anyway, why didn't they just call it a markup? I don't know. Come up with a fancy term for it.
Well said.
Exactly. So, sorry, I didn't mean to go off on a tangent there. I wanted to allow you to continue your discussion. I know you were talking about the compensation disclosure regs. So let's talk about some specifics within that. I know there are a lot of specifics, but let's start off with the 408B2B requirements there. Why don't you explain what this is, what this affect, and those numbers probably, those code regulations, they probably mean something to some people.
Yeah.
So why don't you start with that? That kind of leads us into some of the other discussions.
So the underlying authority or basis for this proposed reg is ERISA section 408B2B.
Mm-hmm.
And that is an existing part of ERISA that came in through CAA 2021
Mm-hmm.
that effectively said, hey, if you're a service provider to an ERISA covered plan and you provide certain services that set forth in the statute, then you must disclose compensation.
Right.
And the DOL picked up on that and that section 408B2B and have kind of fleshed it out further for entities providing what? Pharmacy benefit management services. And again, that's the basis for the reg. So if you provide those services, here's the compensation streams. And there's some other aspects of the reg we could talk about, but in the interest of time, I won't, because I'll keep going to your question. Because in addition to 408B2B ERISA coming into being through CAA 2021, we now have a CAA 2026,
Mm-hmm.
which was just enacted into law. In CAA 26 was just enacted at the beginning of February. Congress further amended this magic ERISA 408B2B to effectively clarify that any service provider that performs services on the statutory list is subject to the disclosure requirements. And why did Congress do that? Because prior to the reg and prior to the CAA 2026, PBMs and TPAs in particular were taking the position that this compensation disclosure requirement did not apply to them.
Right.
Because the statute said the words brokerage services and consulting.
Mm-hmm.
And TPA was like, well, I don't do brokerage services. I don't do consulting. But Congress always intended to pull, for example, TPAs and PBMs into this compensation disclosure requirement. So almost going back to our price tax conversation, Congress needed to do something to make sure folks that they felt were, or that they intended, I should say, not felt, they intended to subject to a legal requirement was not complying with said legal requirement.
Right.
They had to take another step.
Yeah.
So they amended the law to clarify.
Right.
So what does that mean, or the importance of that is, and we at SCI have been talking about this, we would expect that the DOL will come out with another regulation very similar to the Pharmacy Benefit Management Services Reg. This time, that reg focuses on third-party administrative services.
Yeah, makes sense.
Where they'll list what those services are,
Mm-hmm.
and then they'll identify compensation streams within the TPA ecosystem.
Right.
That must be disclosed.
Yeah, and just to remind our audience, in case you're not 100% familiar with this, I know we've talked about it on podcasts in the past many times, but in 2021, it was the brokers and consultants, as Chris mentioned, that had to do those disclosures, which means every year before each renewal, we had to send to the client in advance a complete disclosure of everything we were being paid. And that's where the conflict was, because a lot of people, a lot of entities like PBMs, like TPAs said that doesn't apply to me. They're only talking about brokers and consultants. And so I wanted to come back to that. That's when you started receiving those notifications from your brokers and consultants, and you get them every year with a renewal now. So that's the kind of disclosure that Chris is talking about here that would apply now more generally to other parts of the industry, like particularly the PBMs and the TPAs, which they're addressing now with this 2026 version of this. So anyway, just again, further information for our audience, just so that they're not confused on that. I didn't mean to interrupt you, Chris. If you wanted to
No, not at all.
with other items along those lines, feel free. Did you have any additional comments you wanted to make, or Anthony, about this?
I mean, let me make the last point, and then let's turn it to Anthony on surprise billing. I know we wanted to cover that as a topic. But the last thing, especially speaking to the plan sponsor folks in the audience, it is very, 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 very important that you get a compensation disclosure from your broker, from your consultant, from your TPA, from your PBM. And why is that very, 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 very important? Because we've been seeing employee participant lawsuits in the context of fiduciary breach. Dorothy, you've talked a lot about it. I'm sure you've had podcasts. We've mentioned it when we've been with you in the manner of a podcast. But why is this important? Because the plaintiff's bar is looking to this disclosure requirement and saying, aha, if a plan sponsor didn't receive the disclosure, that's a violation of ERISA.
Right.
And if plan sponsor, let's say you received it, but you never looked at it, you just put it in your drawer, that is a violation of ERISA. So we very well could see legal complaints coming down the pike that focus on the receipt or non-receipt, the review or non-review of this compensation disclosure.
Makes sense.
So those are my last points.
Yeah. Okay. Well, you mentioned it, so let's just turn this over to Anthony now. Let's talk about surprise billing. The three of us have talked about surprise billing on podcasts here in the past. And I know, like I said, I've been listening to everything and attending all your webinars and been paying attention to this for all these years, but there just seems to be always updates that are necessary on this, because let's face it, when it comes to surprise billing, which again is for emergency services, and basically almost 100% of the time, it's almost embarrassing how often the providers always win those disputes, right? When you're talking about going into the portal and, stating your case, the plan sponsor, usually the TPA on its behalf, will submit claims into the portal, but it almost always comes down to the provider winning. So let's talk about this, because that's what most people relate to when they talk about surprise billing. So having said that, I hope I didn't step on any toes there or change your thought process there. But Anthony, why don't you start off with just telling us what's going on? What's the latest with surprise billing?
Yeah, so everyone knows that the IDR process from the NSA is kind of a mess. To your point, I believe the numbers from last year, I believe providers won over 80% of the time. And, that's in addition to some of the other ways they're kind of rigging the system, whether it's, having these middlemen on behalf of providers just flood the zone with claims. There were over 1.2 million claims last year. So everyone knows something's wrong with the process. It's one of the things we've been pounding the drum DC about. We actually just got the proposed regs on some changes to the IDR process and open negotiation sent to OMB. So that's progress. It's frustrating because this is a change that we think is going to have to come on the regulatory side because, Congress moves slow in general, but there's a lot of, there's a doctor caucus in the Senate. So that would be a much harder avenue. But we talking to the administration, they realized some of the issues. They're very, they're very acknowledging and, almost, I don't want to say on our side, but they are very, willing to acknowledge that some, it's a...
Well, they're showing a little bit of empathy, but that doesn't necessarily mean that they're going to do anything about it, in my opinion. That's my personal opinion. I mean, they've been showing empathy for years. It doesn't matter. I mean, I represent our
Yeah.
self-insured and, clients that they've been the losers in these situations time and time and time again. And a lot of times, you mentioned flooding the system, and what you mean by that, I want to make sure our audience understands that, is they're flooding the system with things that aren't even supposed to go into the IDR portal. Just because if you overwhelm them, then they don't have time to look through it all. So they just get through the stuff as quick as they can because there are only a certain number of actual entities that are doing this work. And the results aren't good for the employer plan sponsor. They're just not. So again, personal opinion there.
I mean, one of the things it's like physically impossible for the IDREs to see. They would have to average an incredible number of processing claims a day just to get close to the number. So we know it's physically not possible. So not all these claims are even, legitimate or valid.
I'm sure they'll start using artificial intelligence.
AI.
Yeah, exactly.
Oh, we'll see about that. But yeah, as it currently stands, something needs to change. We kind of play on the fact that, hey, you guys passed the NSA, Trump's first administration, it was intended to do a great thing, and it still can. It's this, hey, you guys passed the bill, don't you want it to, be carried out the way you guys intended? So we are optimistic that we can see some regulatory changes down the road. And there's also legal action that Chris could speak to a lot more. He could articulate it a lot better than I can as a lawyer. But we've had a Supreme Court decision that then went against the providers. There's a number of lawsuits, like there's one from Elevance against Halo MD, which is one of those, Halo MD is one of those PE-backed kind of middlemen that are, submitting all these claims on behalf of providers. One of the last things I'll say is we're also trying to get a new CBO score, which I believe is happening for the NSA, which basically would just give so much more material and data and numbers to show exactly, just how one-sided the process has become.
Yeah. And before we go on to Chris, because I know he has a lot to say on this, he has that look on his face. Explain what the CBO is again for the audience's benefit.
So Congressional Budget Office, they do a cost analysis of how much the bill's costing and kind of everything that has to do with spend and cost. And that's the score that congressional staffers and Congress uses when they're arguing how much a bill will cost or how much a bill is costing or a law is costing.
Thank you very much. And Chris, I know you have a lot to say on this subject.
Well, actually, surprisingly, for once, I don't have that much to say because I think Anthony covered much of it, and you have as well, which is, the biggest problems here is the flooding of the system by certain providers, and many of the claims that are being flooded through are ineligible claims.
Right.
And they still get through the system, and the determination amounts are massive. Exponential from the underlying qualifying payment amount. And that's the biggest problem. And the administration knows that. They understand it. They just haven't figured out how to stop it and how to police it. And even though we are going to get some proposed regulations which should formalize, that is, the open negotiation process, which a lot of providers are skipping and going straight to IDR. So ignoring until they can go to IDR and then flooding the zone with ineligible claims. Like that's just what's going on. And I don't know when things are going to be fixed. It's certainly not going to be fixed by these proposed regs. They're going to be helpful, but it's not going to move significant needles. I think Congress does need to get involved, but we don't think that they will. So it really is a mess. It just sadly for you, for your clients, for people listening here, both on the service provider and the plan sponsor side, it's just a mess. And I sadly, for once, don't think, even though things take long to get done, right? I just don't see a solution. Not even anytime soon. I just don't see a solution, sadly.
Yeah.
So
and
for that,
as someone who's actually, talked our clients through this when this was happening, and we had situations which I think we've mentioned before. I know I've talked to you about it, Chris, but I think I mentioned it briefly in one of the podcasts before as well, that we've had clients that didn't even know their claims were in the IDR process because the providers found some old address that was 20 years old or something and sent it to them, which there were plenty of notifications of new addresses online and everything else, but they never received the notification. All they received was a letter saying that they owed this amount of money. Like, what are you talking about? What negotiate? What are you talking about? This was the decision that was made. We weren't even part of our decision on our plan because we didn't even know it existed. So those are the kind of games that are being played and have been all along. The providers have gotten very, very good at coming up with ways to make sure the system works, I guess, in their favor, as often as they can. And at first it was, and we've talked about this before as well, that I felt in the beginning, and I know you guys have felt the same way, that a lot of times the third party administrators just didn't do a good enough job, and whoever they were contracting with, submitting the claims so that they would have a better chance of winning, because they didn't put as much time in. They didn't put all the details in on all those additional services and all those additional education that they have in order, to do these types of services, how they're specialists in this and blah, 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 where the providers would have all of that information ready. And we talked also in the past about how they would have a ton of information, but they would summarize it nicely in nice, quick little bullet point form that the person making the decision in the portal would say, oh yeah, okay. They didn't even read the rest of the documentation. These 4 bullet points or these 6 bullet points make sense, right? And they didn't have to look at it, where the plan sometimes put too much information in there without summarizing it, and it didn't even get looked at. So again, a lot of reasons why, but I agree with you, Chris, and I just think it's just not good. It's not a good thing for plan sponsors. The worst thing that every time I mention the surprise billing, their eyes just roll and they just, because it's like, when are they going to fix this? And it doesn't sound like they're going to fix it anytime soon. So anyway, sorry. Didn't mean to bring my personal opinions into that, but it's just a reality.
But you're spot on. And we're still trying. So at least, us, SIA and the folks that we're partnering with on the payer side, we're working hard. We're still lobbying at both the administration and the congressional level, but I think you hear the frustration of the audience. I guess I'm saying this both in your voice and my voice.
Yeah, no, it's terrible. But and you guys are doing the best you can. I mean, I'm happy that you guys are doing as much as you are, because it's not even an uphill battle. It's like an up mountain battle, I mean, it's just this, it's just something that, but you guys are stuck with it the whole time, and you continuing to have conversations in Washington and talking to the agencies, talking to Congress, talking to everyone, so that they at least understand. And I think, as you guys have said before, I think they're starting to get a better understanding of what's happening now, right? But they just haven't done anything to correct it, right? Is that where we're kind of at?
Mm-hmm.
Yeah. Okay. Well, is there anything else in Washington that you think that our viewers and our listeners here, our audience, would like to hear from you about? If there's something else that we didn't cover today you think is really important, is there something else you'd like to mention?
From my perspective, I think we've talked enough. I like to talk, and there's always stuff to talk about. But no, I think the relevant stuff is what we covered. And when there's other relevant stuff, we'll just come on back.
Yeah. And
Anthony, any last thoughts?
Yeah, you're always welcome. And next season, I'll definitely have you back again at the beginning of the season. We used to do this in the fall to cover everything that's happened since the last time we've talked. But hey, if I have to call you back a second time like I did this time, and by the way, thank you so much for coming back. That's asking for a lot, and I appreciate it. I really, really do. But thank you. Thank you so much for being with me today. I appreciate you coming back, like I said, catching us up on everything that's been happening since the fall, since we couldn't talk about these things when we wanted to. So again, thanks, you guys. I appreciate you.
Thanks for having us, Dorothy.
Yeah, again, thank you.
If anybody would like to contact you, how would they do that?
Call us, email. We're pretty easily accessible, so we're always happy to talk.
Is the easiest way through the SIA website? Is there a contact form, something like that, or?
Yes.
Okay.
I would say through email. You can email me at amurrello@cia.org, and Chris.
Yeah, Condeluci at cia.org. I'd say go to our SIA website and you can find our, I'm looking really to Anthony, our email addresses are there. It's just easier than spelling it out over the podcast. So yeah, check us out though. We're happy to respond.
Thank you very much. I really appreciate all of you, all the work that you guys have done all throughout the year and continue to do. Like you said, you guys put so much time, energy, and effort into this, and I just want to make sure that everyone understands how much time, energy, and effort you guys put into these things every single day. So we appreciate you. I appreciate you. And again, thanks for doing this once again. To our viewing and our listening audience, I wanted to say thank you for all of your dedication and all of your continuous, watching and listening of us over the past 7 seasons. This is going to wrap up our season 7. So please just stay safe, stay healthy, and stay tuned for the next season of the Benefits Executive Roundtable. Not the next episode like I usually say, but the next season of the Benefits Executive Roundtable, which will take place in the fall. Thanks, everyone.
Thanks for watching. Stay tuned for compliance tips, cost containment ideas, new trends, and decision-making tools. This podcast is produced by Advanced Benefit Consulting, Fullerton, California. All views expressed are those of the host or interviewees and not necessarily those of Advanced Benefit Consulting. Information contained herein should not be construed as legal advice. We always recommend that you consult with your legal counsel as situations do vary. Ms. Cociu can be reached at 714-693-9754 extension 102 or toll free at 866-658-3835. By email at dmcociu@advancedbenefitconsulting.com or visit our website at advancedbenefitconsulting.com.